So, welcome to the FIMS session. This is unit number 4. So, unit number 4 of financial institutions and market services. Okay, financial institutions, markets and services. So, here when you talk about the first 3 units, we have discussed about the importance of financial market, and then we also discussed about the money market and the functioning of money market, various players in the money market. That is all about the 1 to 3 units of the FIMS. Now, unit 4 talks about the debt market. So, what is this debt market? And how important is this debt market in this Indian financial system? So that we will see in this unit number 4. When you see the contents of the debt market, what is given for us in the chapter number 4? So what is given here? It is we will first learn about the meaning of debt market, and then we'll learn about the evolution. So how this debt market has been evolved in India. So it was not very active before 1990s. So now it is very active. So more and more people are more and more companies as well as the government, they are using this debt market so to raise the required capital for their business operations and for their investment. So how it is now, it was not there earlier before in the year 19 before 1990s. So how these slowly slow transformation has happened, that we will see under the evolution of the debt market, and then we'll also see the interlinkages between the money market and the debt market. So we'll first see what is the difference between money market and what is the difference between debt market. Money market is for short term funds, debt market is for long term funds. And in order to have a better debt market, we need to have an effective money market. So that also we'll see under the second topic. And then we'll also see various instruments and players in the debt market. So here are various instruments. So who are the various players? In fact, the government is one player, the municipal corporation, state governments is other players, and then we have the corporates, that they are the third players. Banks also, they use this particular debt market very effectively. So how these particular players, and who are the buyers? Who are the buyers of these various instruments? So many a times banks will be the buyers of treasury bills and some government bonds which are issued by the RBI. And then normal investors are also there, mutual fund organizations. Next, we have primary dealers in the debt market, and then so many other players are also there in the debt market. So that we will learn about the players. The issuers of the securities and the buyers of the securities comes under the players of the debt market. And then we will also talk about the instruments. So which are the various instruments that are used by the various players to buy and sell the securities? Okay, when the securities, when the debt instruments are sold, so how that particular debt instruments are sold? So Government of India, they issue treasury bills and they issue some dated securities, and then we have corporates, they issue debentures, and there are certain PSU, public sector units. See, public sector units from 1990. So they have started issuing some bonds. We call it as PSU bonds. So what is all about that PSU bonds, and what are the features of that PSU bonds, that we will see. We'll also see about the commercial papers. We'll also see about the certificate of deposits which are issued by only the bankers. So that comes under the instruments of the debt market. And then we will also see about the Securities Trading Corporation of India and the primary dealers in the government securities. Primary dealers are the people who are authorized to buy these particular securities in the from the that is issued by the RBI on behalf of the government. And then in turn, what they do is they distribute or they sell securities to the other financial institutions in the market. So who are that primary dealers? So what is the role of the primary dealers in this particular debt market? So very important role that we will also see. And then we'll also talk about the bonds. Now, what are the features of the bonds and what are the different types of the bonds and the rating that is given to the bonds? Now, these, as I told you, that the bonds are the long-term debt instruments, different types of bonds we have. Okay, so what are the different types of bonds we have, that we will see in detail, and we'll also learn about the features of the bonds, and then the bond rating, very important. So if at all someone want to buy a bond, and if he do not know about, so what is this bond, in which bond he want to invest, then he take the help of the rating that is given to a respective bond. So based on that rating that is given to that particular bond, he will decide whether to invest or not. So, that is about rating. Rating is very important. We will see that very lastly in this particular unit. So that is all in a brief about the debt market. Very important subject for you in your FMS.